All right.
Good morning. I'll call to order this meeting of the Audit Committee of Columbia Economic Development. And the crux of the meeting today is to receive the report from UHY. And I don't think there's anything we need to do. Just turn things over to Nicole and hope for good news.
Yeah, no, absolutely. I think it is definitely good news. And thank you, Jim. Yeah, so we have the draft financial statements today of the audit. And like Jim said, I think it was a good year. Things were pretty straightforward, so there wasn't anything too crazy for us to deal with. And you're going to see that, I think, in the results that we're going to go through. We do still need to finish the single audit. I'll just mention that at the start. So that the plan would be to issue these basic financial statements by March 31st, which is what you're required to submit for Paris. And then we will work on the single audit after that date. Part of the reason we didn't try and do the single audit, we actually wanted to try and do the single audit concurrent with these financial statements, but it's actually an issue on our end with our software provider. There was an update to the uniform guidance, and the software provider hasn't released the new templates that we need to be able to do the right calculations and documentation. So I apologize. There's really nothing I can do personally to push them to release the templates. It's kind of just we're at their mercy. But the audit opinion is a clean, unmodified audit opinion, which is what you would expect. That's page 1 through 3 of the financial statements. Going to start at page 9, and then we'll go back to page 8. Page 9 is your statement of revenues and expenses and the change in net position. On this page, you'll see that the change in net position at the bottom of the page was $37,408 compared to the prior year, which was $33,120. So overall, very consistent in the change in your net position.
Nicole, the page number that you're using is the typewritten page.
Yes, I'm sorry. So the page is on the bottom of the page. I think
the written one, the handwritten or the
Handwritten number 9, I think the written one.
well, our packet has.
your packet has different numbers. Yes.
Yeah.
So
9.
okay, not the handwritten, the
Typewritten.
typed page
Okay.
number.
Thank you.
Sorry, I didn't realize there were standard numbers on yours.
Got it. Was the same number, was it?
Okay, perfect. And some of the highlights that kind of contributed to the activity this year that are just a little different than the prior year. You had administrative fees from the village of Kinderhook. That's $15,000, third line down there. I also realized yesterday, as preparing for the meeting, that we have the administrative fees that you earn from the Columbia County Land Bank currently included in the grant revenue from Columbia County. We're going to pull that out. It really should be a separate line, administrative fees from the Columbia County Land Bank. So that'll show as a separate line, and that was $60,000 for the year. The rest of the operating revenue is pretty consistent. Going down to the operating expenses, you'll see the grants line. Last year, you had approximately $400,000 of grants that you gave out versus about $292,000 this year. And the main change there was just about $75,000 of a decrease in the CDBG micro enterprise grants that you gave out year over year.
And the other issue with the Columbia County grants up above is that includes the $300,000 from the Office of Community Renewal grant program that we've been able to give $25,000 to individual businesses that qualify. Just the $460,000 that we get as a under the contract is listed as an appropriation based on government accounting.
Right, so that's shown down at the very bottom of the page, right before your change in that position. So it actually gets shown separate from your operating revenue.
And so when I do my analysis as to what percentage of our revenue comes from the county, I'm not using the pass-through income that we receive.
And then the other thing in the operating expenses that is significant is your loan loss reserve. So you'll see that went from about $16,000 last year to $132,000 this year of expense. So an increase to the loan loss reserve.
You'll remember that we approved 75,000, but Nicole can explain what we did with respect to the pond and the
Hudson
Hudson
Cruises.
Cruise, based on what's happening with the Hudson Cruise bankruptcy and the fact that the pond's been on the market for a year.
So we basically trued up the reserve based on the loan loss calculation that Martha and her team provides to us. And then in addition to that, like Mike said, there's 2 loans that management has determined are probably uncollectible. So we determined it was probably in your best interest to just fully reserve those. So that's about 66,000 of the reserve. It's just those 2 loans on their own.
And the theory was that if, we'll use the cruise as an example, because that's a public information. The bankruptcy trustee suggested that he sell the boats, and there are 3 boats, and distribute pro rata to the 3 lien holders. Sawyer Savings, of course, did what any other lien holder would do and say, we're first priority, so thank you very much, but
Right.
so they have, the trustee has resigned and transferred the assets back to the state Supreme Court. And they're going to sell the boats, and Sawyer will get paid out first. Then there's a small SBA loan, and then there's our loan. So I figured that this would make us a little high on our loan loss reserve, but if we get cash, anything from cash, we can apply it to bring it back down.
Yeah, we did.
Or we could use the cash.
Who knows if we'll get anything
you will?
in a fire sale like that?
You don't know. You got more chance of getting something out of the pond,
Yeah,
because it's really.
doesn't appreciate as much.
And you were, but I think the difficulty is, how much someone will pay, for a, 30-year-old diesel boat. This is a difficult thing in this environment. Martha, where's that guy in, that bought the train? We need to call him. Oklahoma. You could put it outside of a seafood restaurant.
So that increase in the reserve, the 132,000, if you flip back to the previous page, page 8, you'll see the total allowance on the loans is 433,000, which is towards the middle of the page on the loans receivable less the current portion, not the allowance. On this page, under current assets, you'll see the receivable from the Columbia County IDA continues to grow year over year, which I know sure you're all aware of. The IDA, you charge them a fee of $12,500. It's basically you have 3 years that they owe you at this point. I know from attending the IDA meeting last week, there's a couple projects on the horizon that Mike expects hopefully will close, and then they'll have the funds to repay CEDC. There's also 15,000 due from the Columbia County Land Bank at the end of the year for those administrative fees. The restricted cash you'll see increase from 650,000 to 806,000, and that's really due to the SBA 11 tranche of funds that you received during 2025. So you borrowed another 350,000, which then requires you to restrict additional cash, so that increased your restricted cash balance. And then under current liabilities, you'll notice there's 45,000 of an unearned revenue current portion. That's the Hudson Valley Creamery loan that is also offset by a deferred revenue, because the expectation there is if they meet the requirements of FTEs and certain things in their agreement, you forgive that in 2026. So that's why it's shown as a current liability. Any questions on those couple pages? The rest of the footnotes, there's really not much that has changed. There was a new accounting standard that required adoption this year, GASB 102, but it didn't actually change any of the disclosures or how you report anything. Basically just a standard that expands on risk disclosures. So if you had certain concentrations or constraints, what would be required by the organization to disclose. We already disclose, we have concentrations, like their concentration of revenue from Columbia County. It's just if there was a triggering event that would indicate that potentially you no longer get that funding, there's additional disclosures now that GASB requires to be included in the financial statements.
There was also an additional disclosure with respect to the composition of the loan fund in terms of concentrations. And, as all of Steve maintains a report showing not only where the loans are dispersed throughout the county, but by industry. And we do monitor that carefully, but obviously, losing the county fund, losing the SBA grant, I mean, those are risks that the organization has in the ordinary course of business.
But the rest of the footnotes, mostly carry forward, do have some new restricted funds, during the year. I'm laughing. The IDA sold a piece of property, on behalf of the county during the year. It generated, a revenue of about 48,000. And the county directed, the county directed IDA to pass those funds on to CEDC and restrict them for basically the county to tell you guys what they want to do with it in the future. So you've had those situations in the past. It's not really new or unusual. It's just now there's a new line item in your restricted net position for that 48,000. And some additional disclosure and a related party footnote as well.
And my attempt was that if county asks us to spend it this year or next year, 2026, that we've taken the money into income last year and now we have to pay the expense, and that would impact negatively the cash flow from 2026. But we did discuss and review maintaining the for one more year the residual on the Columbia Forward and the housing deferred income. So we have 42,000 and 25,000. So that if we did spend that, we could attribute that to it to make sure that we didn't take a $45,000 hit with the county having to spend the money next year.
Yeah, and then the last thing is just our report on internal controls on page 24 and 25, and we did not have any significant deficiencies or material weaknesses to call out in that report. There were a few adjustments we made during the audit. Some of them are just adjustments that we always help the organization with: depreciation, the adjustment on the lease asset, and then there was a few that, ideally management would have reported on their own, but they weren't significant enough to require us to put anything in our internal control letter.
And we are going through our annual review of journal procedures that we've been doing over the last several years. We do have EST coming in tomorrow and next Wednesday to work with Kat and I on reviewing how we can put QuickBooks Pro to work on a more technology base, even to the point of when an invoice is emailed or received by mail, that it's scanned and automatically goes in and go to an electronic filing system. And the QuickBooks has an ability to read that invoice and post it for you. So we're going to try to, and I think we're down to, I think about, we have 680 transactions a year, and we're down to about 80 of them are handwritten checks, and that includes about 80 deposits. We are paying about half through ACH and half through Key Bank Bill Pay, and one of the things is looking at a more sophisticated small business bill pay software, bill.com or.
Yeah, there's some outside
Yeah.
services.
And so I think, again, some of those changes will require committee and board approval.
That's really all I have with any questions.
Nicole, I got a question on page 10, which deals with cash flows.
Yep.
Down at the bottom, cash flows from investing activities.
Yep.
That's 410,000 from 2024 went through a zero in 2025. You fill us in?
So in 2024, you sold all the CDs that you had, so that
Well,
generated,
they cashed out, we put them in cash.
yes, they matured, or, yeah, so you moved it to cash. So that's the 410 you see of proceeds last year. This year, there are no certificates of deposit, so there were no.
Well,
maturities.
as you'll recall, we took advantage of the high interest rates with the certificate of deposit. And then when it was matured, interest rates weren't much different than what you would get in a open savings account. So it was reserve money. And we just put it into, we went into a bank account instead of being in a CD. So the CD is kind of categorized as an investment, but it wasn't as if we had stocks and bonds or mutual funds.
And if you look at the bank interest on page 9, Jim, I mean, there was a slight decrease. It was 36,000 of bank interest last year
Right.
versus 29. So.
And it was because that was rates weren't available.
Yeah.
We did do an analysis of bank fees and interest. And we, are gonna take a look at, our relationships because, frankly, I'll share that at the finance committee meeting, at the next finance committee meeting. And we do have the, note that says that we're not, we've got more than $250,000 in the 3 banks that we do business with, and that there's the risk that the federal deposit insurance, would not be available. I cannot find a bank that knows how to, back it with collateral, which they're supposed to be able to do for not-for-profits. And I think, we have to take another look at that, maybe get to a senior, corporate money person rather than,
Could do that.
people.
HRI.
Yeah. So. Other thing, Nicole, on page 18 of the report, which is 21 in the packet.
Yeah.
Each year, they do a summary of our loan activity. And as you'll see in the balance of January 1st, 2025, in the second column at the bottom, showed that we had 3.138 million on the street. And this year, at the end of 2025, we had 3.41. Then when you take out the allowance, you can see we've increased the allowance by $133,000. That our total loans net are beginning of the year were 2.8, and now they're 2.9, or almost 3 million. There's 2 pages in front of you, long pages. If you look at the second one, this is a report that Martha and I have worked on, and Steve's been over time, and Steve's been helpful more recently. But what we started doing in 2021 was we added back in, if you look at the column, in 2021, our total after the allowance was $1,666,000. But we below that added the amount of money to that total, putting back the allowance, the amount available to lend in each account. And so the total portfolio was $3.3 million in 2021, and now it's 4.53. I don't have the available data to do the similar analysis for 2015. But if you look at December of 2015, on the line where I do have that data after the allowance is netted out, Martha has doubled the loan fund in terms of the number of loans outstanding over the last 11 years. So I congratulate her and Steve for this work. I mean, it's incredible.
Yeah.
We were contacted this week, or in the last 2 weeks, both by the Saratoga Economic Development Corporation and the Ulster County Economic Corporation, would we mentor them to set up a loan fund? And we said it takes 25 years to get where we are in a loan fund. They had $250,000 they each wanted to see could they generate additional income. And if you took you did $10,000, $25,000 loans, 5-year terms. I think we showed them they could make 12.5. So when you're looking at the fact that we're making $150,000 in interest, it's because of the volume. And we can only do that because of the funding that comes with the SBA grant, and the fact that our write-offs would be a lot more, I believe, if there wasn't the availability of the technical assistance to that SBA grants. And we had no write-offs this year.
Right.
Yeah, $3 million of loans on the street with no write-offs. It's not a bad thing.
Thanks, Mike. Are there any questions or further comments on the audit report? If not, I'll entertain a motion to recommend that the board accept and approve the audit report at the next meeting.
Second.
All in favor?
Aye.
Anyone opposed? Motion is carried. Nicole, we thank you and your colleagues
Thank you so much.
at UH.
One last thing, Mr. Chairman, there's the first report on the top page. This is taken from 2015, and changed the caption. The information that came out of each of the audits. And you could see that if you look at the 5 lines down, it says total assets. We've increased our total assets from 3.2 million to 5.6 million, which is a 76% increase over that period of time. But if you go down and look at the last line, our net position at year end, in 2015, it was 2.5 million, and now it's 2.8 million. So when you look at where the asset and liabilities are, it's all in the loan. And what you don't have here is, if you look again at total revenues, the third line down at the profit and loss section, 2015, it was 685,000, and now we're at 1,589,000, which is a 132% increase. Our expenses are increased at 67%. And I have a second sheet that shows if you do an average, 11-year average of the third line from the bottom, total revenue in excess of expenditure. And over 11 years, our net income averages out to $6,530. So we're a true not-for-profit. And it shows the net position line now shows just how stable, even though we've had a 76% increase in net assets. And it also then shows how sensitive the organization is to its revenue source.
Very consistent. Been, significant growth over the years. So. Bravo to.
Well, and the growth also came from every time Steve and Martha have a chart that shows, what was it, like $70,000 your first SBA grant, right? And now it's 300. And we're happy to say that yesterday they paid us the check or wire arrived for the September 30th payment from last year. So just the first quarter of the grant, because they're on this. Well, thank you. Thank Kenny. Thank the entire team. You had a new team member on the emails this year.
Yeah. Braden was a manager on the job this year as well. He was new to the engagements.
And we really appreciate it. Thank you for putting up with my consistent reading of your reports. And,
it's always a pleasure. Thank you all so much.
I remember our first year talking about loan loss reserves.
Hopefully we don't have those same exact conversations anymore, so a long way.
Well, now we actually do a risk report. I don't think we did that then. Thanks so much. You brought us a long way.
Thank you.
Also, I want to thank Kat Leiden for all of her work and doing the day-to-day work that goes into the report. And the 15th and you should have gotten it yesterday, the 15th and the 30th, twice a month. They wanna get us to a 26-week pay period, but it's such a hassle to do that. It's difficult for people to, when you're used to getting it on twice a month rather than every 2 weeks. Thank you.
Continuing on with the agenda, we have the consent agenda, which consists of the minutes from last meeting, the audit committee discharge duties, and the audit committee evaluation, and the audit committee charter, and no changes in the audit committee charter.
Motion to approve. Okay.
All in favor? Aye. Anyone opposed? Motion is carried. Thank you. And if there's anyone from the public here, this is your opportunity to comment. Hearing none. Another opportunity in the future. Floor's open for any other audit related questions, comments? Thoughts?
Smoothest audit I've had in a couple of years that I've,
Yeah.
yeah.
Very clean. I'll entertain a motion to adjourn.
Make a motion.
Second.
All in favor?
Aye.
Thank you.
Thank you, everyone.